This segment is brought to you by the Equity Management Academy. To go right into uh, the report that was published last Saturday, November the 6th, I want to take a look and see what has transpired basically this week and get a good idea, more or less, what we can expect to happen for the following week. The gold market last Friday closed at 1089, and with the market closing below the 9-day moving average that we use of 1129 is confirmation that the weekly trend came in this week a little bit bearish. But it also tells you that if the market was to close above 1129, that, excuse me, that it would negate this weekly bearish short-term trend to neutral. It would neutralize this bearishness. And the 9-day moving average is used as a pivot point, as an indicator of the momentum, the trend momentum changing from bearish to neutral to bullish. In the same principle that we follow the methodology that we execute here in the room in using the weekly momentum indicator. Uh, the with the market closing below the VC weekly price momentum indicator of 1106, it confirms that the price momentum is bearish. Now, the 1106 is your weekly pivot point or your mean or your average metrics for the week. It identifies the weekly trend up or down, once again, down, neutral, or bullish, in the same manner that we follow the methodology when we are entering into our positions. So this tells you that a close above 1106, it would confirm that the weekly, it would trigger stops and negate the bearish signal to neutral. So this is another pivot point that you want to be looking at. It's the 1106 using the mean. This is the mean, and the average price is 1106 so far as we came into this week. But this tells you that closing below it was bearish, and so look to take profits on shorts into corrections at the buy one and buy two levels of 1068 to 1048. And it tells you to go long on a weekly reversal stop using the 1048 as your stop. Okay, that was coming into this week. Let's take a look and see what's happened here. And using the daily charts for December gold. This lines that you see here are basically the daily algorithms. And what we're looking at is the weekly algorithms, how they relate to each other. And what you see here basically is that on the 6th, the market was telling you that we could come down this week to 1068 and 1048 in December gold. That was the buy one and buy two level. The low, the 12th, was 1073. 1078 has been the lows for the past couple of days. Yesterday's low was 1073, and it coincided exactly with the buy one level on the daily signals. The B2 level is all the way down to 1059. And what we are defining here, if we take a microscopic look, is first of all, the markets come down right into this alignment between the daily and the weekly at the buy one and two levels of 1073 to 1059. The this coincides almost precisely with a trend line support, Fibonacci fan trend line support that we're using. The previous low was on October the 2nd that almost made a very similar pattern from the previous resistance level, coming down, going above, testing it, closing above it, and the target was the third line, and obviously this came in as a major resistance level, as it coincided pretty much with the previous high that we made on October 15th. And it resulted in a correction, an aggressive correction that took 3, 6, 8, 10, 12, it's about 13 days completion. Yesterday's low was potentially the indication that the market rejected these low prices, and demand that was found here was far greater than the supply selling that was coming in. And so the price reacts sharply, and what we're waiting for is actually for the price to close above the 1087 on the gold market, which will be breaking above this little bit, this little bearish flag that we see here. That usually is the precursor of a big move, of a bullish move. Bearish flags are indicative of bull markets or completion of the next leg to the upside. If it breaks, if it closes above this line, and this line coincides with about 1087. So what I'm defining for you is that if you get a close of 1087 in gold, we're going to be off to the races, as the market validated basically the weekly pivot of 1068 at 1048 as well. And if you look at the RSI incorporating that, it's pretty much looks like extremely oversold. Okay, so we're using, we've been using these levels here, particularly the last couple of weeks, to add to our position, as we are anticipating that the next leg is going to be all basically to the upside into the about 1217 level for the gold. That coincides with this uptrend line resistance level that we've been building based on the last couple of months. And so you see here pretty much what criteria we use to identify with high probability the signals. Just to reiterate what I'm saying, when the price comes down to the blue levels, and the daily levels match the weekly levels, we call that harmonic timing. And it is a very, very high probability that it is identifying where the major level of demand is in the market. The fair price or the mean is 1087. The extreme above the mean on the daily, we're looking at about 1115. The extreme above the mean on the weekly in gold is 1126 to 1164. Let me see. This was the weekly. Let's take a look at monthly here for a minute. The extreme above the mean on the monthly is 1187 to 1234. So these are the levels, the targets that I would suggest that you unload some of the purchases that you're making now at these levels, because what you're looking at is that the daily is matching the weekly, and the weekly is matching the monthly harmonically, and that is a perfect alignment that we look for high probability trades. This is Patrick MontesDeOca. If you have any questions at all with regards to the work that we do, please feel free to contact us at basically the 877 number, US toll free 733-1511. My direct line is 805 area code 418-1744, or you can email us at support@ema2trade.com. And once again, it's been my pleasure to share this information with you. If you have any questions at all, please feel free to call me under no obligations. Until next time, my friends, have a great trading week. We'll talk to you soon.